Welcome to Turning Hard Times into Good Times. I am your host, Jay Taylor, and I'm speaking to you here from New York City on the first day of August 2017. I do like to remind you each and every week I'm the author of a newsletter called miningstocks.com, miningstocks.com. Actually, that's the place to go to buy my newsletter, which is called Jay Taylor's Gold, Energy, and Tech Stocks. Jay Taylor's Gold, Energy, and Tech Stocks, and we're having a really great time right now with Novo Resources, which is rising very, very dramatically. Novo has been a company that I've talked about frequently on this show. We've had Dr. Quinton Henning, the CEO of that company. Just a phenomenal story. The stock is up from about 65 cents to $2.25 in July, but there's a lot to it. Really, I think it's something that you should pay some attention to, and I certainly will be following it religiously in my newsletter and on this show. And Dr. Henning will be with us in a couple of weeks to talk about what he believes is the next Witwatersrand discovery. The Witwatersrand is one of the largest gold deposits. It is actually the largest concentration of gold ever found on Earth. Something like 40% of all the gold that's ever been discovered has come from the Witwatersrand deposit, and Dr. Henning thinks that he's found the extension of that in Australia. Very, very exciting story, and one that I have been talking about just extensively in my letter and on this show because I'm so excited about it, and now the market is finally starting to suggest that maybe my views, which are really a reflection of Dr. Quinton's theories and his views, are in fact correct. But time will tell. A lot of work remains to be done. But you might want to consider subscribing to Jay Taylor's Gold, Energy, and Tech Stocks at miningstocks.com. Go there, sign up for a very inexpensive subscription. So also like to encourage you to consider subscribing to Chen Lin's letter, What is Chen Buying, What is Chen Selling? Go to chenpicks.com to do that, chenpicks.com. I want to thank our sponsors for making this show economically viable. Our sponsors for today's show are New Range Gold Corp, RN Resources, Novo Resources, Genesis Metals Corp, GMV Minerals Corp, Fireweed Zinc, and Osprey Gold Development. With regard to just another word or two on Novo, I just can't stop talking about it now. Just to give you some sense, if you listen to Dr. Henning a couple of weeks ago, I guess he was with us in the middle of May sometime, he talked about these gold nuggets that were being found with metal detectors along a 7 or 8 kilometer strike length. And then he's convinced, or he believes, it's very possible, very likely, that extends some 65 kilometers south. So we're looking at potentially, and I underscore the word potentially, a bed of rocks that maybe is 5-6 kilometers thick over a very, very extensive area. Of course, it remains to be seen if they're mineralized, but if they are mineralized along the shoreline, the ancient shoreline, a 7 or 8 kilometer stretch, anything like that, going deeper, it could be a phenomenal story, and we may indeed be on to something very extraordinary. At least that's what Dr. Quinton thinks the prospects are. And again, he'll be with me in a couple of weeks to talk about the latest. And by that time, I think we'll have some samples, some bulk samples, some channel samples, and so forth that should start to give us a little better idea of what the grade might be. Continuity of the deposit is also very, very important. Anyway, today's show, Eric Coffin is going to be with me, and Michael Oliver is standing along, waiting here just for me to stop my discussion so he can give us some wisdom. And Ralph Shearing, he's the CEO of Telson Resources. That's a company that's putting not one but 2 mining projects into production in Mexico. I think very worth your while looking and listening to what Ralph has to say. He'll be with me after the first commercial break. It's a polymetallic mine, gold, silver, copper, lead, zinc, that sort of thing. 2 of them, and with a market cap very, very small. I think it's one that you might want to pay some real attention to. Eric will be talking to us a little bit about some of his top picks and some of his exploration plays. One of them is doing very well today and yesterday as well. I think maybe on to a discovery of some sort. We'll talk to Eric about that, and Eric will be with me at about 1:30. But right now, Michael Oliver is with me. Thanks for joining me again, Michael.
Good to be back, Jay.
Yeah, I missed you last week. We were, Mrs. Taylor and I, traveling at a little vacation. We were out in California. We had spent a little time with Rick Mayberry, who's a who is a guest on this show from time to time. And we had a really good time, but we always miss you, Michael, always miss your insights. Of course, as a subscriber, I read your frequent missives, and that helps me stay abreast of the market and keep me from having a nervy bust when things aren't going my way, especially when it comes to gold, and gold is the market that I'm most interested in, and all the other ones that are related to that, like the dollar, like the equity markets, like the T-bonds, like things like that. But on July 28th, as the near-term gold contract was about to expire, you put out a message suggesting that maybe we're going to see a little bit of upward momentum for gold. What can you tell us about the way you see the gold markets right now?
Well, the big picture is still very positive. Each of the sharp pullbacks that gold's produced ever since its 35% explosion that occurred in the first half of 2016 has been to higher lows. It dropped from 1370 peak after having seen a low at 1050, by the way, in 2015. Went to 1377, pulled back all the way down deep into the 1100s. This is late last year. That's really the biggest correction gold has produced, and it's not uncommon to have major moves like that, contrary to a newly emergent trend. This happened in the topping process back in 2012, where you as far as we were concerned, it was topped, and you would have $200 rallies to nowhere. They wouldn't make a new high or anything, just to intimidate those who might have realized it was a top. And we stayed convinced then that it was a top, and sure enough, it finally paid off in 2013 with a big collapse. But now the whole table is turned around. Everything's different. It's all back up. And I think that pullback into December last year was it. Then we had a sequence. If you look at a price chart, which we do, but we de-emphasize price. Price had a pattern of zigzags to the upside, all the way back up almost to 1,300. This is from a low in the low 1100s, a secondary higher low than the bear market low. And finally, you took out a prior low. For instance, we made a low, I think, in May at 1214. And therefore, the pullback that we recently had that came down there finally nipped out that low, meaning you took out a zigzag low in a sequence of higher zigzags. It's the kind of thing that people looking at price charts get too preoccupied with. Whereas they look at a recent sharp low and say, gee, I don't want to take that out. Well, sometimes you need to in order to clean it out, to run some stops, to get some weak longs out of the market. And as soon as they did, they went to 1204, $10 below the May low. Next thing you know, we're at 1273 today. Okay? Now, there's a pair of price highs that everybody can see up in the 1290s that we've made over this year. Both peaked within $1 of each other in the mid-1290s. As far as we're concerned, those highs are going to come out because momentum action has already closed above the equivalent of those highs, and I'm talking about a long-term momentum oscillator that we watch. So momentum tends to lead on the upside and not confirm on the downside. So, for example, the same momentum chart that broke out, as you quoted on July 28th, last Friday, did not take out the May low when price came down and took out the May low. So, in other words, momentum said, nope, it's not a good low, and sure enough it wasn't. The market turned up. And then now the market is short of its highs, yet momentum's above those highs. So we're very positive. I tend to think that we're probably ready for another strong ramp in gold and in the gold miners. The GDX has behaved in the same way as gold, technically speaking, as on our momentum work. And it also crossed some key levels last Friday on the close. So as far as we're concerned, it's a green light, and I think that the coiling, twisting, unnerving action of gold over the last 6-9 months is over. We're probably on the route to strong upside again. There is another number I'll throw out for everybody to mark down, 1321. That's more than $50 short of last year's high. You trade 1321 anytime this year, and I think you're going to launch probably a couple $100 pretty quickly. So that's another number I'd watch, and that's, what's $50 above us, so it's 4.5% above the market. Not that far.
Not that great a move, and it certainly would be possible. With just a couple of minutes left here, I have to ask you about the T-bond, which to me is one of the most intriguing markets there is. Alan Greenspan reportedly is saying that it's that it's a bubble and it's going to burst. And it seems to me that you've been out ahead of Alan, because you've been sort of suggesting that your momentum work is suggesting that the T-bond has turned for a long time. I think you're talking about a secular turn probably in the T-bond. What's your thoughts now about the T-bond?
Well, we labeled it a major bear market as of last October. Price then was 166 on the T-bond futures. They're now 153, 154. They're having a rally. They've had a rally for many months now, 4, 5, 6 months, really gone nowhere, but just a slight upside bias. That may persist for a while longer. I tend to think that the next leg down in the bonds, which we have some numbers defined in our reports, is not quite ready to commence yet. And it may be being supported by the wobble that we've just seen over the last week or so in the so-called FANG stocks, or the very narrow leadership of the market, especially Amazon and Google. They've had sharp drops, and the S&P's tried to ignore that, but I tend to think there's some money saying, hey, I want to find a safe place. And, the typical thing, what do? You buy T-bonds. That may tend to support the T-bond market on a intermediate basis for a while longer. I don't think it's going to drive it north in any strong way, but it could delay the next decline, which I think will be substantial, meaning higher rates. But that factor alone, the sharp wobble in the narrow leadership of the market, could be something that's affecting bonds right now.
Well, you'd have to think that another bear market that you've called is the dollar. The dollar is really weak since you made that wonderful call. It's just been absolutely perfect as far as I'm concerned, making money on one of my investments accordingly as a result of that. But you would think that people would look around and say, well, okay, we got T-bonds, they're denominated in dollars. Maybe that's not the greatest thing if the dollar is losing 10% of its value a year. Then where do they go?
Well, that will undercut T-bonds. There's no question. I mean, if you're a foreigner and you're invested in it and you're losing on the Forex side of the equation, then it's definitely a negative. And that is a drag on bonds, and that probably is a restraint on the bond rally. But anyway, in our reports, we're monitoring for the renewed breakdown, in the T-bonds. And they just missed it last week by about 0.5 point, and then they've bounced a point and a half since then. And I think that's probably due, again, to the knee-jerk flight to, quote, safety that you see whenever the stock market wobbles. And, again, the stock market I'm talking about now is several stocks. So, you have to realize the percent drop they've just suffered, Amazon and Google, for example. Yeah,
and another thing that the wind at the face of the T-bond market would be commodities, and just really real quickly, I guess you're still very, very bullish on commodities, and especially...
I think the commodity market, as a whole, is turning. It's irregular. We've had some recent rains and so forth that have affected the grains back to the downside. Everybody thinks, oh my gosh, we got a glut of grains, and now we've got a good crop. And first off, we're not the world in grains. That's step one. And secondly, look at the relative price of grains, historically speaking. And sometimes you can have a good crop and yet be vastly underpriced for too long in a given sector like the grain sector. So I still think that the grains have bottomed and are looking for a sharp turn up, but I also see it in the soft commodities, cocoa and sugar. I see bottoms being made. Oil, I think, is going into the low 60s. It's right now in the high 40s. I think, as I said, on gold and silver are higher. So I see more across-the-board commodity strength in process right now than I did last year. And I think the dollar is a help in that regard.
Yeah, indeed. Yeah, the dollar is a help, right.